Right, joining us now to share his commentary on the day's market performance is Vik Sharma from Differential Capital. Hi Vik, good to chat to you. And it's been quite a volatile period, okay, at the end of the US shutdown. What are you seeing on markets today?
Thank you. Thanks for having me. And I think volatile for a safe reason, right? I mean, there is data that is lagging in the US. So we are now gonna get this Thursday the data for September payrolls. Although that technically doesn't matter because your October payrolls should technically come by 5th of December, and the rate decision is on 9th or 10th. But I mean, I think the jittery feat that the market is getting is because of the fact that the delayed data potentially could actually show that the labor market is okay, right? Because the labor market potentially got softened later, and that kind of filters into Fed's expectation of, hey, I mean, are we going to get a rate cut in December or not? So essentially, even though it is, like really stale data, markets just trying to struggle to kind of come up to terms with, how to interpret it. But I think more people are actually leaning towards that it actually might show good numbers, which might actually mean, no rate cut in December. But I mean, the market, last I checked, there is still a 54% chance the market is expecting that there'll be a rate cut in December by the Fed.
Sure, it keeps changing, Vic. All right, We Buy Cars. They're under a little bit of pressure. They've got opposition from other companies, but they've made news headlines today.
Yeah, I think, you see, the business model was all right. They were gaining market share, and they're perceived as a growth stock in the South African market, right? And when you're perceived as a growth stock, and then technically you come up with words like there is a structural change in the market, consumer behavior is changing more towards cheaper cars, and that is why we had to actually change. That's almost like kind of saying, there is something that has changed in the undertone of what you read the market initially to be. So essentially, even though they're growing, let's call it 15%, etc., the market's expectation is much higher. They were trading at a much higher multiple. So the big shock here is that, the new car market is actually kind of fueling quite well by consumer, what I call is pretty much latent demand. We Buy Cars probably was cashing in on, let's call it last 5 years of consumer not buying new cars. But there is a cheaper alternative out there. So they were just expensive, pegged as a growth stock. It looks like there is a bit of a bump in the road for them.
Yeah. Let's take a look at Astral Foods. I will be chatting to their CEO shortly, but some good results. We're calling it a tale of two halves. Good, but then great.
So second half, if you were to do the math, they're making close to about like 16, 17 Rand worth of earnings, right? So in total, they have reported 21. That's the kind of fortune change that you're talking about. And it's just basically the same things which were hurting them in the first half have actually changed. They've got the pricing power back, the underlying maize is down. And just looking forward, we're having very good rains. It is a La Nina year. So hopefully now the maize plantations will go through and maize crop will be fine. So their cost, which is one of the biggest cost is maize, if that is fine and let's call it the industry is well behaved, they should make money. I think they've got 1 billion Rand now on their balance sheet. They've increased the dividend, like you said, to about 11 Rand. And at the peak, they've paid a dividend of what, 14 Rands, if I remember correctly. So it's all looking good for them. It is a bit of a cyclical business, but they're making hay while the sun shines.
Yeah. All right. From them to Barlow World, it's a bit of a different sort of scenario.
Barlow World is, again, I think more to something that we had already known, kind of that Russian business, embroiled with the kind of geopolitical tensions in it. And that is the one that has been underperforming, but a lot less focus for the market. As you very well mentioned, that stock is going to delist. There is a consortium that is buying it. They've got their own set of struggles in terms of how do they revive this business. But essentially, like I say, I think that has been a known risk, which is kind of materialized. Thankfully, all the other side of the businesses are still okay.
Yeah. All right. Hold that thought. Before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
What they're doing is exactly what Chantal said. They're growing organically. They're doing it through strong brands in those regions, really good service and pricing analytics. And that allows them to maintain those really nice gross written premium growth that they've been seeing. terrific return on equity. It's in the region of 36%. And I think with the kind of the tech integrations that they're putting in there and, the new growth into Ireland, I think it's definitely one to watch.
Going to go for Bidvest. Yeah, I mean, it was a toss-up between the retailers, the discretionary retailers and Bidvest, but I think that if you're looking for kind of an immediate, a more immediate positive impact, I think Bidvest would be it. Very well diversified as well, tentacles in almost every area of the South African market. I think the services business has performed very well despite a very challenging economic environment, and any sort of pickup in growth will be very positive for that services business, consumer brands, and some of the more random segments of that Bidvest stable, like automotive, for example. So yeah, doesn't look expensive either.
Right, there you go. Doesn't look expensive either. Vik, OUTsurance and Bidvest. Let's start with OUTsurance. Your thoughts?
Yeah, OUTsurance, phenomenal business. It's not just an SA story. They went organically into Australia, and one of the very few businesses in JSC who didn't buy anything but actually have grown a business from scratch, right? So utmost respect for them. Now they're going into Ireland, and probably they'll kill it there as well with the propositions that they potentially have. I think solid management team, solid business, nothing against it. My only problem there is they trade at about 24 times PE, which is probably one of the highest PE for a short-term insurer. Right?
Sure.
Not that there is no growth, not that there is no ROE. It's all there. It's just that you have to stomach that very high rating there, right? But a phenomenal business in itself.
Yeah, a very strong business. A really very strong business. All right, the other one, Bidvest, then somebody else who's, well, they're strong too.
Yeah. Definitely strong. They've actually used money to, diversify offshore quite a bit. That's not to say they don't have an SA business. SA business is still quite decent business. I mean, like your, my counterpart from the industry said that, it is looking cheap. It trades at about 11.5 times PE compared to its, 10-year average of about 14.5. So there was some refinancing that needed to be done, which was done probably slightly higher than what they were anticipating. They've sold, some of their bank stake. And yeah, I think there is still an SA business which can, be bowed by the growth if SA does tend to tick the right boxes, and thankfully we are. So I think I do agree with that it looks cheap. It does have an SA portion, kind of a neglected stock, and has a very strong services component to it.
Yeah, right. You can't pick those. We've done quite a few today. What is your stock pick?
Okay, I think I'm more of an SA Inc. Kind of a guy. I think probably you guys must have noticed it by now. So I'm trying to play that retail idea that if SA has to recover, the discretionary retail has to recover. I mean, not that it has been a very easy ride. TFG, as you remember, reported really bad results. So I'm picking Woolworths. It is kind of a defensive food play because you have that cohort which has got, let's call it the upper echelon of the economy, which spends quite a bit. Their, so-called inflation's running equivalent to the inflation of South Africa, much higher than any other food retailer. Then they still have a positive volume growth. On top of it, their food, beauty, fashion, beauty, and home business is kind of chugging along like we have seen from everywhere else. The biggest turnaround there is in their country road business in Australia, which is technically, if you were to do the math, is being valued at zero by the market. So very solid business with potentially turn that can happen with the SA economy. Australia is kind of turning already. So you do get, let's call it a defensive overlay of that food together with the flavor of that discretion. Trading at about 15 times forward, probably if you were to roll it forward 12 months, 13.5 times, much lower than its historic averages. Yeah. So kind of a safer way to play a little bit of discretion.
Absolutely. I'm glad they've sorted out their Australian operations. Vik, thank you so much. Good to chat to you on Business Lunch. Thank you. That was Vik Sharma from Differential Capital.